Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. Alongside me in the chat is Cameron May. We welcome him. And we got many of you here today, such as Debbie, Scott, High Speed, Low Drag, and we got Grace or GH with us. We got Kevin with us, Amun, WW, and many others. Welcome to all. Now, this Trading Growth and Value Stocks is kind of we're at an interesting junction in the portfolio, the margin and the IRA, because in those accounts, the margin and the IRA, there's only two stocks, and it's Microsoft and Hood. That's it. There's five ticker symbols that are a grouping of stocks or trying to track something. 4 out of 5 of those were put on last Friday. Okay, so we've got 2 stocks, 5 grouping of stocks-ish, which I'll re-show again on Friday. But man, this comes at a good time because all the other positions we have in the paid money portfolio as example trades are derivatives. So kind of talking about stocks here today, kind of important because there's not really any stocks in the portfolio outside what I just mentioned to you. And I'll show you those in just a moment. Now, remember that when we get started here, we do post educational content on X. So you could check us out. You could go to Cameron May's X page. Our handle is just simply our first name, last name, CS for Charles Schwab. And so that's how you could actually find us. And Cameron will post his link there. I'll kind of show you a little bit of what I posted here today to kind of give you a little taste. Sometimes people say they post, but then you don't know, like, well, what do you post? And I will show you that to kind of give you a little flavor. When I'm posting on X, I'm kind of showing some things that some investors might be looking at, and I'm sharing that on X. They are examples, not recommendations. Now, remember, as we get started, the information here is provided for general informational purposes only, should not be considered individualized recommendations. Schwab does not recommend the use of technical analysis as a sole means of investment research. A lot of us, including myself, we got started with technical analysis. That's a starting point. It makes a lot of sense to learn how other types of analysis can complement technical analysis. And so that's why we do these classes on fundamentals. Now, we're going to do trades that are in the paid money account, and we do that for educational purposes only. But we know that investing, when we talk about investing, it involves risk. There's no reward without risk, okay? And so we want to kind of talk about what are the risks of that stock trade. And when I say stocks, we're talking about stocks, not derivatives. This is a stock class. Now, also remember, as we get started here today, I want to kind of talk about some investing themes that we're seeing here today. I also want to know from you, are there any themes? Did you notice when you looked at the Dow, the NASDAQ, the S&P 100, etc., or you looked at maybe prices, did you notice any themes that were out there that you kind of kept coming across similar names? We'll talk about that. And so what I want to also do is just kind of pull up the indexes real quick on the sectors, and then start getting into how to rebuild some stock positions in the paper money account. So let's do this just real quick. So I want to kind of show you, if I can, pull that up. There you go. So this is my X page. And so kind of give you a little flavor of what we talk about. And I'm going to go back. Let me just scroll down. So many of you ask about, let's say, the scripts. I post those right at the very top of my page. It's pinned there. Any script that we talk about, it's in blue. You cannot copy and paste that. You just type it in. And so those are the scripts. Each row is an individual script. In blue is the script. Okay, if you said, well, I don't know what is the script, each row is the script, we'll actually see that in the middle there, it states what's the purpose of it. Okay, and then in blue is the script code. So those are right there for you. So that's number one reason why you go to that page. Second, if you actually said, hey, I do talk about, let's say, U.S. markets and international markets, and you could read what I talked about U.S. markets year to date, and also international markets as well. Some of you actually follow that new asset class, which has actually been hitting some new highs. You also see, for example, the SPX. I think that we are at the 17th new high. So some of the things I actually post are really, let's say, just not with a picture sometimes, but they are with a picture. So I do a little mixture. Okay, so check that out. I think that could be helpful as far as kind of getting up to date with what's happening in the market. Let's talk about the market in terms of list form here just a moment. So if we look at this, and I feel like, we just said the SPX was hitting what, the 17th new high of the year to date. The Dow Jones, and I'm going to show this in a list form, and I'm going to show this in a chart form. Dow Jones is up almost another 1%. You actually got the SPX up about 12, about 0.2%. NASDAQ down 5-ish, which is pretty much par for the day. But the one that actually has just kind of absolutely exploded has really been the Russell 2000. Did any of you see the Russell 2000 here today? Please tell me, for the love of Pete, you actually saw the Russell 2000. Now, one of the things I made mention of is just kind of understanding, like, say, some themes out there. Well, one of the themes we actually have in the marketplace right now is the push for the Fed, for example, to push the interest rates down, right? Now, I want to kind of just write this, so I'm going to write IR. So these interest rates, he's trying to push, trying to actually get the interest rates down. Now, for the September, okay, now this goes into the trading theme here. There's a reason why we're talking about this. When we have IR, interest rates actually going down, you could actually, for example, get maybe the Russell smaller caps. Okay, so these are companies that are not as well established. They don't have established product lines, services. They don't have scale. What I mean by scale is they might just be in a region of the U.S., etc. They might not necessarily even be international. Okay, they're just domestic companies, and they just don't have diversified business. They don't really have a balance sheet of a lot of assets, and they might have quite a bit of debt. So when we talk about, let's say, the RUT, that area could benefit, especially if the interest rates, IR, go down. That's a theme that we're seeing. For the September Fed date, for the FOMC, I think it's a 100% chance of a 25 basis point cut. So keep an eye on small caps. Now, some investors, they might just say, look, I'm going to buy the product that is tracking the Russell 2000. The other thing is, if the interest rates actually go down, some investors really like utility stocks, okay? They maybe like some also, I'm going to put P for staples, and they also maybe like some real estate names. Now, in real estate, we did the example last week on Friday of, let's say, home builders, okay? And I'm just going to put H builders, okay? Sorry for the spelling. Home builders. That's one way to start. Now, when you kind of think about real estate, the investor might say, well, James, what about Lowe's? Okay. What about Home Depot? We know we were tricked. Honey, all I wanted was the house. And we were tricked. Okay. We were absolutely tricked. I'll be happy if I can just get the house. And that happy, I could just get the house, lasted for about 2 weeks until the spouse, him or her, it could be both, went to Lowe's and Home Depot and said, let's do a project. So those lower interest rates might actually help Lowe's, it might help Home Depot, but it also could actually help, let's say, the individual names. Now, when I say home builders, we're talking about the group of home builders, but we could also, let's say in this case, individual names. What are some individual names of home builders? Answer, Lennar, okay? We could actually say Pulte Homes, okay? We could also say, in this case, DHI, to name a few. And this is really a theme that if we did our due diligence here today, that would have been hard not to see this. I mean, look, I'm not the sharpest knife in the drawer, but I mean, after you see rates pushing down, after you actually see, let's say, Lowe's going up, Home Depot going up, Lennar going up, Pulte Homes going up, DHI going up, and so on, I mean, after a while, you just start to see the correlation, right? Now, the other thing I want to kind of bring out as far as that theme, the one thing that we actually want to kind of point out, those interest rates actually go down, it pushes costs down, okay? And if it pushes costs down, well, there also might be, let's say, a theme that sometimes people say, look, I need to take a break. Now, I always tell my kids, look, you need to take a break from taking a break, okay? I don't know why you need a vacation. You haven't done anything yet. Now, sometimes my wife says I'm too hard on them. But hey, now the biggest thing is if the costs actually go down, the cost of borrowing money, some investors might say, look, I'm going to try to maybe go on a little vacation. I need a break. You can't always be working. Now, some people, that's what they say. Now, the biggest actually thing is they might also think Delta. They also might think UAL. So these are, I just want to kind of state out just up front, what are some of the themes that we're seeing? These are some of the things we want to bring up. Now, did I miss anything? Did you see anything else? Now, the comment is when we take a look, I just want to see this just real quick. Now, Lisa says, ha, 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 about my joke about you need to take a break from taking a break. Yeah, it's, okay, yeah, so I'm working on it, okay? My softness, I'm working on that. So what you're going to notice is jets. So you could actually just think, let's say, the airlines in general. I'm not filling that last letter there, just jet in general. Now, let's kind of take a look at what some of these charts look like, okay? So we set up front what some of the themes were, okay? And the biggest actually thing is, Dean also says toll. I forgot about toll, forgive me, okay? Now, Dean also does bring up, there's some grouping of real estate where it's maybe like healthcare real estate, apartment real estate, it's maybe mall real estate, it's hotel real estate, and so on and so on and so on. Yeah, you could absolutely include that group as well. Now, if we take a look at this, so let's kind of show this. Let's start with just real quick SPX. Here's the SPX, okay? Now, I know you're sick of it. You're thinking to yourself, if I see another new high today, you're just going to throw up. I don't want to be the bearer of bad news, but that is a brand new high. Okay, now remember what I said. Be very careful who you listen to. I've seen people completely brainwashed into thinking the market's too high and it's going to crash, and they put their portfolio bearish, and it's unbelievable. Okay, so do not think that everyone is positioned bullish. Okay, now when we look at the SPX at a new high, this correlates now to, let's say, the sectors. So when we look at the sectors, there must be something going up. What are those sectors? We'll come to those in just a second, but let's hold those right there. Now, when you look at, let's say, the Dow Jones, that has had a pretty good push, okay? The moving average crossovers, uno, dos, tres. I mean, I don't know how clear it could be, but really counting to three has been interesting, okay? And that yesterday, if we look at that, that was step 3, okay? A lot of people get confused on, well, which one? Well, it depends if you want more confirmation or less confirmation. If you said, I don't know, okay? Well, why don't you start at the middle one? Why don't you start at number 2 and see if that could actually be a place where you could practice? That was a gap to the upside, okay? Today, we also did see that we went down for a day there, okay, and went up. And that's something that we've been talking quite a lot about, these 1, 2, 3 day pullbacks, and then do they push to the upside? Now, the chart, we'll come to this NASDAQ, that also did hit a brand new high, would have liked the candle to be green. I know how you feel, did still punch a new high. And if you look at the Russell, now I need everyone to close their eyes. And if you do not actually follow the rules of closing your eyes, I will not show you this chart. This is graphic in nature. This is PG-13. You do not normally see charts that look like this, that's an index, is everyone's eyes closed. Now, one time I did this and I forgot to tell everyone to open up their eyes. Okay. So now that you close your eyes, let's now open your eyes as we put our eyes on Russell 2000. So as there's been some more discussion upon rates cutting, okay, you've actually seen a pretty good pop in the Russell. Now, that doesn't mean necessarily you have to actually trade the small caps. What I take out of the small caps is if people are buying the small caps, this is really kind of showing sentiment of the investors. And if this chart is actually going up and investors are buying these names that are in the Russell 2000, man, they're chasing performance, okay? And kind of something to think about. We're not at the year end, but the biggest actually thing is people buy the Russell 2000 that typically get a higher rate of return potentially to the S&P 500. Now, we're not even close. Okay, I don't think so. But if you look at that, you could be getting a chase in performance. In other words, picking an index that you think might outperform, let's say, the S&P or the NASDAQ. Beating the NASDAQ could be quite hard. Now, if I look at this year to date for just a quick moment before we look at our first trade, if I said year to date for just a quick second, year to date, and I said, hey, can I get that percentage, showing percentage? Well, this is what I really mean. The Russell is up 4% year to date. And you look at something, let's say the SPX, you're talking about it's 10. Now, if you're thinking, well, it's only 6%, well, it's only 6% times, potentially, if you have the index, times the notional value. And then all of a sudden, it ain't just 6%. And you take a look at something like the NASDAQ itself, it's blasted triple what the small caps are. Now, historically, I've talked about the Russell maybe kind of in depth a little bit one time. This might be the second time. Keep an eye on that Russell. Do we start to get the Russell to fall more in line? Does it do a catch-up trade to the NASDAQ and the SPX? That's twice this year I pointed out in the depth that we were talking about it. Think of something to keep an eye on, okay? Now, you might be thinking, James, how many eyes do you have? I don't know. The answer to that question is how many screens do you have, okay? Now, let's kind of talk about, just real quick, going back to the sectors just briefly. So when we look at these sectors quickly, you're going to now notice that when we look at the IXB, this was a pretty good push here on the material sector. Steel helping here as well. Silver is actually holding up fairly well. Keep an eye on that. We're not saying that's the strongest group, but one of the names that you might have been watching is discretionaries. Has anybody been watching discretionaries? You might have also been watching, let's say, the small group called Communications Group. That was a consolidation to a breakout. So there's kind of some names here that are getting pushes. We can include, of course, technology. We could also include semiconductors. And I'll just flash those. There's technology, which looks like the NASDAQ. And if you said, well, show me the semiconductor index, there it is. That's a brand new high, little consolidation, little rotation to the upside. Notice that the entries are not different than what we've talked about for a long time. They're the same. It really comes back to just being disciplined to the actual entries and trying to let the trends play out. Now, let's go to actually trade number one here. And I want to go back to just real quick, if you don't mind. We talked about Delta yesterday. Just kind of some quick thoughts here. When we look at Delta, this actually had a pretty decent push on that yesterday up into the area of resistance. Today, we did not hardly give back any of that. For example, a huge candle yesterday, okay? And what might that tell investors? Well, they might be thinking, hey, could maybe we get back up inside this old channel? So what you're now going to notice is if I back this off for just a sec, and let me give about 2 years on this so we can, go back to that 1 year. There it is. The reason why I'm kind of pointing this out is, could Delta be breaking inside this old channel? Now, what's the significance here? Now, we've talked about this, right? Well, if you break inside the old channel, if there are people that are bearish, they might exit their bearish position if the stock breaks resistance. Well, that's number one. The bears, smart ones, they might say, I'm going to exit the stock position by covering their short position. That's number one. Number two, someone who's trading a breakout, a new investor, could be saying, look, I want to get in. Third thing could be happening is someone could say, look, I already have shares, but I'm going to add to the position. So there could be really a triple whammy play, is what I call it, of the stock where you're breaking some major levels and it might try to go up to the top of the channel. Now, I'm going to go back to the paper money account in our first trade example, buying shares of stock. We're going to come back in. We're in the margin account, go to the trade tab. And what I'm going to do on this is we're going to right click on the ask price. We're on the trade tab, Delta, buy custom. We're going to go with OCO bracket. Now this class is trading growth and value. Now, if we take a look at the buy custom, you're now going to see that whatever price we right-clicked on here shows up down there. Okay, there it is. Now, we already know that if we went back, well, where do we see the next upside channel? I don't care if you saw me do this before. I care if you actually practiced it in the paper money account. So let's practice this together. Now, let's say you said, look, I'm anticipating other investors saying sell if we get to 66.5. Some investors like to undercut that a little bit. They would rather try to get out a little early than stay too late. And what that means for us in this example is we're going to try to put a target here at $66. Okay? Now, if you take a look at this, yeah, so the comment came from Cameron is, when we talk about the Russell is an index. Can't buy the Russell as an index. We're talking about the language I said is that it's really, the investor might say, look, I'm going to use a product that's trying to track the Russell index. Now, Connie at 4 p.m. Eastern on Monday, she teaches a class on ETFs. Kevin Horner and I teach a class on Friday, 9:30 a.m. Eastern. Both of those classes are live only, okay? So if you said, could we walk through an example of what that might be? Join us there for those live classes. We'll point it out. Now, you probably already know what I'm talking about, but we have to save that for that class. Now, when we talk about the stop underneath, we're going to go back to this and we're going to look at where that stop is. And that stop, if I pull this up, where's the potential support area? Now, remember, many investors, they might say, look, James, I want to kind of take it where it kind of broke out from, which is about 53. I'm going to kind of mark some different lines here, 54. And if I'm going to kind of use something a lot more aggressive, I'm going to use, let's say, 56. Now, historically, when I got started investing, I'd be like, man, I want tight stops so I don't risk that much. But the problem was, if you don't risk that much, you have an increased chance of getting stomped out, which means you realize losses. So I was really good at that, realizing losses on shallow pullbacks, only to see many of those stocks go back to the upside. And then I thought, man, maybe I need to relook at that, okay? So in this example, we're going to set that stop a little lower. Now, this might blow your mind, but what we're going to kind of show is that we're going to take 54.12 initially, less 2%, and it's really going to give us 53.03. Now, if we came down like 10%, that's quite a bit. It could. And what I'm going to do is I'm going to set that initial stop at 53.03. Now, do we think it could go down there? It's a probability that it could. But the biggest thing is we're trying to give some initial, we're trying to get that to break through inside the old channel, make a higher low. And if we can just see one or two higher lows, that stock could be moved up quite aggressively. So trade number one here is, now, by the way, we have the position size, okay? When we talked about setting up this portfolio, we said, look, at the most, 10% capital, at the most. Kind of more, conservative, 5 to 8% capital. If you said, I'm not really good at figuring that out, don't worry, go down to the pool balls, percent, dollar amount. And if we said, what's 10% of 35,000? It's going to be $3,500. Now, if I type in $3,500, that's the capital that we're going to put into the trade. Right above the dollar amount, you're now going to notice the red icon. Now, when I click on the red icon, it snaps and says, well, how many shares would that be? And the answer is 59 shares. All right, that's what it is. Now, a lot of times what happens is we're kind of like tempted. I want to buy more. Well, it'd be nice, okay? But the biggest thing is that's the budget, okay? So we're telling this, look, this is what we could budget. When we look at all the positions, we all think they could go up, but we don't know which ones are going to, okay? So the budget is at the ceiling that. We're going to go confirm and send. We got the target and we got the stop. And remember with the stop, there's no guarantee that what we have the stop for, that's going to be the actual sell price. The stop is a market order. So now what we're going to go ahead and do is say send that order. Okay. So now what we're seeing is Delta, it actually got put in. We do not see it filled yet. It's sitting there. We'll kind of wait about 2-3 minutes to see if it fills. The ask price and the limit price is 1 penny difference. If that ask price drops by a penny, then this most likely will trigger. There it is. Okay, ask, limit. Now here's the deal. This paper money account order is one order of many. I know we like to think that my order matters the most, but we're really one of many, and it's trying to get filled at that price or less. Okay, so we'll watch that. Now the comment is, I want to kind of see, so the comment from Rita is, can you please share the script that JB uses for the chart with the 8-day, 15, 30-day lows? Okay, so let me kind of go back to that just real quick. Let me actually see. I think the chart you're referencing is this chart. Now, I'm going to go back to this chart on purpose. So now what you're asking, I know what you're asking, but the numbers are a little off, okay? So what I'm going to do is if we went back down to this, now this is just one of a couple charts that are here. Let me share this. So this white line, so if we looked at, let's say, Microsoft, you're now going to see that white line, that is an 8-day low. And you can just right click on it. You'll see that, okay? I'm going to share this with you. Now, if you're saying, I just need this chart, I'll send that, and I'll send the group of charts. That right there is a 10-day low, the red line. And what is the yellow line? That's a 20-day low. So if you actually said, now, so what's the purpose of that? Well, I want to kind of see if we had to use 8-day low stops over time, how many times did the stock actually go down to that level? What absolutely would blow my mind is I'd ask people, like, where was your stop over time? Well, it depends. Depends on what? So I never got any definitive answers, and that's annoying, okay? So what you're now going to see is if the price has not gone down to the white or red line, then the chance of the stop being hit is small, or it didn't happen. So if we actually, now, by the way, if the price went down to the white line today, does that guarantee that the stop's going to fill? We just went over that. The answer is no. We have to see if it triggered, but where did it fill? Okay. Now, so that's the chart there. Just sent that in the chat. Now, let's kind of go to the other one. So the first trade we actually just talked about, let's go back to the working order. We got Delta. Now, it's off by about a penny here. So the other one I'm going to kind of make mention of, let's go back to this chart for a second. I'm not going to actually kind of show this, but it's the same idea. Yeah, no, I'm not. Delta is one that's kind of inside that old channel. And what you're now going to notice is kind of like a little hammer if you think we're hammering off support. What support? Well, that support that is really kind of this bottom end of the channel. So Delta and UAL are kind of playing off each other. Not a problem, Rita. All right, now I want to kind of go to the home builders for just a sec. So let's take a look. Now, by the way, how would we have known this? Well, if we're kind of doing the due diligence on a daily basis of looking at the prices, indexes, sectors, Dow, etc., you're now going to notice that one of the stocks in there was Home Depot. It was really, currently is sitting 6th off the top. Now, what you're going to notice is if you did the due diligence yesterday, you would have said, my gosh, that was a pretty strong move. Now, I'm an orange person, okay? That's not a recommendation for everyone. Some of you are blue people, okay? Blue for Lowe's. And that was like a 2x4 straight to the upside, and it wasn't hard to see it, okay? If we start looking at some of the S&P 100, Lowe's is near the top list. And why did it randomly go up here today? Investors are thinking, hey, if the interest rates are being cut, could people say the affordability for homes, home projects, and so on, could it be kind of more easing a little bit? Okay, now, what I'm going to focus on is not those two. I want to go back to some of the home builders in general. Now, last Friday, we actually kind of did the example of looking at the home builders as a group. I want to kind of talk about, let's say, the technicals / fundamentals of some of these home building companies. Now, what I want to kind of show you here is just kind of show you kind of the cause and effect. I want to go to just real quick studies for a moment. And what you're now going to notice, if I go into quick study, compare with, and I'm just going to add a custom symbol. Now, the symbol that I'm going to put up here is TNX. The TNX, we're using this as a proxy for the 10-year rate. And for some reason, it does not want to. Let me see if I can't change it to a bar chart. Let me see if that changes it. No, it's not going to do it. That's weird. Yeah. Okay. Here's what I want you to do on your side. I want you to go to studies, go to actually add study, compare with, and what we're going to do is just go to custom symbol and just type in $TNX. Okay. For some reason, mine doesn't want to do it. But you're now going to see the relationship as rates went higher. These home building names, real estate names, they got pushed lower. That's the moral of what we're talking about. Now, what I want to do is I want to bring this up for just a second. Is when I take a look at this, we're going to show the example. Let's go back to Lennar. I tried it with Pulte too. When you look at, let's say, Lennar, okay, let me reload that because it actually changed. There we go. Okay. Load that back. Okay, so it has the moving averages on there. Let's bring up Lennar again. There we go. All right, now let's kind of talk about this. So we know the stock's been pushed down, right? We know that there was resistance level. Now, by the way, there are some people that like to buy after lows, okay? There are. Now, the thinking behind this is the stock price-wise has been pushed down, but also maybe the fundamentals have actually struggled a little bit. Maybe just kind of the business, the industry group, the sector went through a tough time. And maybe that tough time in this case came from interest rates or the economy in general. Of course, those two are somewhat tied together. Now, if we went back to fundamentals for just a moment, let me kind of show you what these fundamentals have looked like. What's interesting is when we take a look at, let's say, the last 5 years, 785. Now, remember, that's COVID. That's when the interest rates dumped, okay? You're now going to see that in really 21, when the interest rates were, what, 3%-ish? It doubled on the EPS. 1572, 1373, 1431. So it's not as high as it was before, but not necessarily horrible. Now, what's kind of interesting is when you look at the sales per share. Now, this is a little deceiving because you're looking at this right here and you're saying, oh, the sales are 130, that's better. Well, you got to remember the price over time goes up. So you could actually be selling less units, but what you're selling is at a higher price. Now, it's nice to see the revenue go up. It should go up over time to reflect actually prices going up. But what the investor is really looking for is at the bottom of that income statement, is there money in the till? Okay. Now, when we take a look at these numbers, what we're now seeing is they're actually holding in there fairly well. Now, a lot of investors like to kind of see that. Hey, there's still a business here. Yes, the earnings is maybe not as high as it was before, but can they actually increase the number of units and also have cost in check to where they could actually have, let's say, earnings per share? Why does that matter? It affects valuation. Why does that matter? It affects the potential dividend. Now, remember, with dividends, they're not guaranteed. They can cut them. They can keep them the same. They could raise them. But typically, if that a company that actually has higher earnings per share, the company might share those earnings in the form of a dividend or even raise the dividend. Now, what we're going to do in this case is we're going to look for a little trade here. Now, I'm going to put an order right at the middle of this green candle. We're going to right click on that green candle, buy custom with OCO bracket. Okay. Now, Scott actually says, what happens if PPI comes in hot tomorrow? Well, so let's kind of talk that through, right? PPI, producer price index, comes in hot tomorrow. The chances of an interest rate cut goes where? Down, right? Because they're thinking, wait, if those rates are higher, if the inflation rate is higher, then maybe they shouldn't cut. It does not go from 100% chance to zero overnight off one reading. It's a series of readings, okay? So it would just typically reduce the likelihood of cutting. But it wouldn't necessarily be the nail, so to say, oh yeah, they're not cutting at all. It would just reduce the probability. Now, what you're now going to notice is we're going to put an order here. I'm going to go back to bring this up right in the paper money account. Let's go back to Lennar. Let's bring this up. And what I'm going to do, right click, buy custom with OCO bracket. Now, before we actually go anywhere, we're going to actually go back to the dollar amount again, type in $3,500. Okay. That's going to give about 26 shares of stock. Now, what we're going to show in this case is on LEN, that order is sitting here about 128.52. So we're saying, now I'm going to even maybe take it 129. How many of you have ever seen a nice big green candle followed by maybe a day or a morning where the price goes down in the morning and then bounces back to the upside? That is what the limit order is. The investor saying, I want the stock to go down, and I'll even put the price to 130, okay? So if this stock goes down about $2 or barely 2%, it's saying get us in the pay money account, in this example, if the price goes to 130 or less. What's the con about this trade? Do we know it's going to pull back? We don't know that, right? So it's going to be something we're going to be watching to say, is it filling? Now, what you're now going to notice is when we look at the target, calling all technicians. So if we said, hey, look, let's say they start cutting the rates a little bit, okay? And if we went back to this chart and say, where might it try to go up to? Let's say revenue increases. Let's say the earnings per share increases. Let's say they maybe even increase the dividend. Where are some levels of resistance that some investors might be trying to say, I'm going to try to sell into? You really got about 141-ish. And then really anything above that, we really got about 161-ish. Now, I'm not a greedy person. Who told you that? So I'm just saying to myself, hey, look, I'm not greedy. Let's say the investor said, look, James, if it went up to 141, I'd be thrilled. Let's use this as an example where the investor might say, look, if it went to 141, I would be tickled pink. And now what I'm going to do is I got 141 target. Now, are we saying that's the only place it could go? No, it might even go up higher than that. This is why the earnings are so important. We want to know, is revenue increasing? Are they actually increasing the forecast of the revenue? How are those sales, right? Is it just in one area of the U.S. or are you kind of seeing nationwide sales improve? And if they say nationwide, that's even more interesting, inflating the revenue. And are they actually getting that revenue to translate into a higher earnings per share? And again, why does that matter? Because it affects the valuation, okay? Now, if fundamentals and technicians see that, you might see the stock try to go back to the upside. So trade number 2 here, we're now going to actually put a target, stop. Where's the stop? And if I went back to that and actually looked at this, we're going to go back and say that stop. Now, for some of you who said, James, I'm going to set a tighter stop. I'm going to set the stop right underneath where today's candle is. 124.75. Okay, that's a pretty big candle here today. 124.75 less 2%. So if we took 124.75, where the moving average is, less 2%, 122.25. So if I bring that up, 122.25, there it is. Put it right there. Okay, dated GTC. So what we're focusing on in these paper money accounts is they don't have a lot of stock positions. Now, where'd they go? Well, sold many of them. Okay. And now what you're going to see is target, stop, confirm, send. And now what you're going to see is read what's in red there. We talked about that. Going to send the order again. Now, I want to go back. Did Delta fill the shares of stock? So Lennar, it's sitting right there. Hasn't filled yet. Go back to Delta for just a moment. Did Delta fill? Not yet. Now this price, when I take a look at this, how far are we off? 59.28. Now what's kind of odd about that is we're higher than that ask price. So most likely in real life, you'd probably say that order should be filling. Okay. Now what might have thrown this off is that's a fractional order. So if we came in and said, look, just 59 shares, would that clear it up and get that filled? Most likely. Let's check this. So we're 3 cents higher than where the current ask price is, and that fills at 59 shares. Okay, now let's go back to this just real quick. A comment came in on Toll. Okay, now this is what's kind of nice is when you have an industry group that's a little that has some diversification of different companies. When you look at Toll Builders, Toll has had a pretty nice increasing support level. So when you go back and really look at this chart, there's really been some higher lows over time, okay? And this was your kind of your classic ascending triangle. You don't always necessarily have to, let's say, have an ascending triangle at an all-time high. It could also be something that's really kind of coming off the bottom. The setup is the same, okay? So Toll Home Builders, so when we talk about Toll Home Builders, typically higher price homes, it's also pushing. And if we went back to, let's say, Pulte for just a second, okay, I'm going to switch the groups here in just a moment. I'm just showing you another one. Pulte was one. Now, some of you might like a derivative versus a stock position. Pulte was a pretty strong push, pretty big candles. And if you look at, let's say, the last one, DHI, that was a pretty big push as well. So the example we did was Lennar. Now, I want to shift. So we talked about themes, right? We talked about how rates might be affecting small cap, how rates might be affecting home builders, how rates might be affecting real estate, and so on, okay? Now, if you have a house, you know it ain't just about a house. It's the stuff or the junk that you put in it. Yeah. It's amazing how much stuff goes in that. And you got to realize it's all of yours and mine, okay? Now, let's kind of show the example of kind of the travel theme. Now, we talked about the airlines, Delta, and we also talked about United yesterday. But I want to bring up, let's say, the Expedia Group as our last trade example. Now, when you go back and look at this on a 3-year weekly chart, this is what we really see. Now, some investors, they kind of like to see these V, or they like to see, let's say, these W patterns. Now, these V or W patterns are kind of interesting. Now, by the way, this ain't the first time it's actually done this. It kind of ran up and then pulled back, pulled back, and then shot back to the upside. It's actually had some pretty, when it goes for a swing, it actually has some pretty good swing, and I'm looking at this on the weekly chart. Now, when we go back to this, one thing that we know that happens a lot of times is, as Americans, boy, we like a good vacation, don't we? We like a good vacation, and it better not just be one of them, okay? Now, if you take a look at this, when you look at Expedia, there it is in COVID year, absolutely went negative, okay? And then you see it turned a little bit, then turned positive, then actually turned a little bit more, and then actually went a lot more. And when you look at the revenue per share over those 5 years, it's increasing. Now, again, imagine this is your business. You want to see your business growing. You want to see your business not just eking out the same amount of profit. You want to see it actually just literally gushing with earnings per share, because that actually kind of gives you some options of what the investor might be able to do with those earnings. Now, if we take a look at this, our last trade example is we're going to go back to, let's say, the 1-year daily. And if you look at this, we had a big gap to the upside post the earnings. Now, a lot of times these stocks will pop to the upside on earnings. And I want to see if I have a chart of that. And I don't there, but I'm going to have it here. If I pull this up, and we've talked about this quite a bit, these lines really represent how far you're off the moving average being the blue line. And so what you're going to notice is we shot way above that white line, which is kind of nosebleed territory. And that yellow line really represents 3% above the 10-period moving average. So what do buyers like to do? They like to buy closer to the moving average, the potential support. It pops to the upside. Investors use that opportunity to actually sell into strength. And now the stock actually comes back down closer to a rising moving average. Now, in this trade example, what we're going to show is we're going to buy a position on this. If we had a little bit more time, I'd like to show the example of buying half of a position, but we're going to show the example of buying a position, the position being 3,500, and we're not going to do fractional shares. Now, the biggest actually thing is, so if we have 16 shares, I'll just put 16 there so that doesn't happen again. We're going to put that order at 209 and change. That change looks like 209.18. The target, we could actually set the extension target, dated GTC, dated GTC. The stop, we're going to put really underneath the 192.71. And you got to remember, if we get a higher low, that's going to be something that the investor could also raise up the stop more aggressively. Now, I don't have the time to actually put a target on, but I'm going to put on an artificial target of, let's say, 230, and then swing back tomorrow and check this out. But this is what the order could look like. Now, the biggest thing is you want to go out and practice these, okay? Look for some of these companies that are actually increasing the fundamentals. The technicals are agreeing with some of those historical fundamentals, and also somewhere that there could be a theme to how the fundamentals could be improving that might affect also the technicals. We did 3 trades here today. We did Delta, we did Lennar, and we also did Expedia. I'm out of my time here today. We got Michael Fairborn coming up next with Markets and Sectors. I want to thank you so much for your comments and your questions. And thank you, Cameron, as well, for answering those questions in chat. Now, remember, with what we discuss, is done for example, illustrative purposes only. Subscribe to the Trader Talks channel, and also check out our other webcasts right on YouTube. Thank you so much. This has been the class on trading growth and value stocks. Stay tuned for Michael Fairborn coming up next. Bye-bye.